Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. Markets have closed for the day. It is Tuesday, 22nd day of September, and this is the daily report for gold and silver. We do have the precious metals complex under pretty strong pressure this morning. Gold trading off approximately $8 on the day, 1125.30. We've seen it trade to a low of 1121.50. That's an important number. We'll talk about that in a second. High 1136.55. As far as silver goes, currently off almost 2.5%, 1480, well below 14 again. And we've seen it trade as low as 1472, as high as 1524. We'll look at silver in a little bit. So, if you recall from yesterday's show, it was my belief then, as it currently is now, that we would probably see gold continue to trade under pressure, and we pointed out a couple of key levels that we really want to watch. I've pulled up our daily chart, and on this daily chart I've got one basic fib retracement coming in from these lows at 1071 up to 1171. So we're looking at roughly a $100 rally. From there, it actually goes beyond the 61% retracement, almost to the 78% retracement, kind of stalling at that century mark of 1100. And from there, we saw the market rally up to a lower high and then come under pressure. So if you recall from yesterday's show, we talked about a couple of critical areas. The primary level was really this 1109. Now, the 1109 is a retracement that we can absolutely see from this longer retracement. And as you can also see, I've also gone and added a shorter retracement, this from just this rally right in here. Now, when we do that, we do get a harmonics 61% retracement, which is 1110, 1109, a 75% retracement, and that's from the shorter cycle. So where do I think this market could eventually fall to? Because my sense right now is that we will probably see this market come down, correct anywhere between, on the high side, around 1115. That's at 61% retracement of the small move right here, to, if it goes to an extreme, maybe 1109. And at that point, I do expect it to come up and make a new high. It's going to have to beat this high if we're going to be able to keep any kind of bullish models, because we do now have this lower high here, but we also have a higher low. So we'll have to absolutely see what we get here. In other words, if this is part and parcel of a move that will come in and take out that 1171. But that's what our current models are predicting that gold will do. So traders, as I said yesterday, I really believe that short term we're probably going to see gold remain under pressure. We just talked about looking at a couple of studies that allude to where we are forecasting price to go. And in terms of a bullish model, yesterday we also talked about the fact that on the real plus side is the fact that when we look at the longest of all the fib retracements, meaning the move from roughly $250, $300 up to $1,900, a 50% retracement really takes us to these bottoms here. However, when we look at the 68% retracement of the shorter move, and when I say shorter, I'm still looking at a pretty long fib retracement, because it really starts from what, 681 up to the top. But when we look at this way, then we're getting this 61% retracement sitting at 1156. That's the point when I can really wholeheartedly embrace a bullish model. But I can tell you this, the fact that we've held support in this area is to me a very, very bullish statement in terms of an overall model. It's not what I'm looking at over the next couple of days or weeks. As I said, I do believe we'll probably see this market wash down to 1109 to 1115, and that's the point I believe we should go in and initiate long positions in gold. So traders, as far as silver goes, I am not as bullish long-term on silver as I am on gold. I know that there's a lot of speculative money and hedge money that's going into silver right now, thinking that that's the better bet. I personally would like to see a little bit more action to the upside. to get any kind of technical confirmation of that assumption. When we look at this weekly chart in terms of the various levels that I believe are current support and resistance, I am pegging resistance at around, call it 1485. It's a 23% retracement. This retracement is from 1773 down to these lows at 1390. I'm also looking at very, very strong resistance right now between, call it 1550 and 1540. That's where I'm pegging resistance, and it is based upon a 38% retracement. I still think that if we see gold continue under pressure, I think we'll see silver continue under pressure. At the point in which we issue a buy signal in gold, we'll see if the environment's right to also issue it in silver and then act accordingly. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.